Okay, recording this video. It is well after the close on Thursday, the 24th of March 2016. It's 11:03 p.m. Chicago time. It's just gone 6 p.m. here on the beautiful island of Kauai in Hawaii, sitting here in my board shorts. Beautiful day today. I hope everybody's trading has been going well over the last couple of weeks. There has not been anything on the site. That is because I've been getting all my ducks in a row and launching the new version of the better indicators, the multiple time frame version of the indicators. So they're now available on the site for TradeStation only for the time being. And it's kind of a beta testing phase, just making sure all the bugs kind of worked out before going through the other charting platforms, NinjaTrader and MultiCharts. Anyway, so because of that, I'm going to run through the multiple time frame charts to show you what they're showing on a whole bunch of different markets and time frames. Going to talk about the E-mini trading today, kind of overnight and into today's activity, then the longer term charts, and then what I'm seeing on the global macro charts, because it's retracement time. All of the global macro charts have gone through really nice kind of trend breaks over the last month or two almost, and now we're having a little bit of settling back and retracement time, and this is the opportunity where those trends need to be tested, and it's good kind of entry opportunities to some of them. But it's a question of kind of picking those in the next few days and weeks. But anyway, let's talk about the E-mini and Thursday's activity. And I'm just bringing up this 500 tip bar chart, showing you what was happening yesterday into today. So now on the multiple time frame view of the charts, we got this kind of handy dandy coloring system for trends, strength and weakness, or uptrends and downtrends. It's my usual kind of coloring, which seems to be counterintuitive, I think, to a lot of people, but white bars are weakness and downtrends, and red bars are strength and uptrends. And yesterday we had pretty jerky market down, and it kind of closed pretty weak. And this, where was the close? The close was around here with yesterday, and you can see that we'd broken all of these support levels and we'd gone into a downtrend. We had quite a lot of selling to get this move going. So overnight, obviously we had the European markets open. They kind of sold off, and this is the downtrend that we had into the open. So the open was happening just around here, right there on this pullback to end of trend. Now the nice little downtrend, we kind of missed that opportunity to get into that, but we had a nice little kind of setup for a long trade afterwards. I always say wait for the exhaustion patterns during the full liquidity of the day. This exhaustion pattern happened on a bit of a left shoulder, but that was pre-open. This one though, this blue exhaustion pattern, happened after the open. That was happening around, what was it? Yeah, about 8:33, so a few minutes after the open, and that kind of got everybody, all the sellers had sold. That's why we're looking for exhaustion patterns. It's kind of showing extreme amounts of selling or buying kind of going on. In this case, at the bottom of the downtrend is extreme selling, and we start to put in a bullish divergence pattern. So the little 5-step sequence goes, number one, you want to see your bullish divergence first, so that's a sign of strength number one. Then the next thing you want to see is some nice little pullback to end of trend sequences, and we had one on the lowest time frame here, intermediate time frame, I beg your pardon, pullback to end of trend, and you can see that's an intermediate signal because it's got this slightly bigger dot going on here. So that's an intermediate time frame, and then we get the first sign of strength, which is a break above resistance. So that's sign number 3, step number 3. And we got this exhaustion buying pattern, which is just showing short covering. You know, people pretty keen to get on board this move. Quite a lot of buying goes on there, but then we immediately kind of sell off. And that is the low risk entry point, this little point here. The first cyclical support after a break of resistance like that gives us this low risk entry point here. It can be either on the intermediate or the lowest time frame, so either the 1500 or the 500 tip bar time frame. And that was the little entry point to get into this move, because we had a really nice little uptrend that kind of ran for quite a few points into this resistance up here. So I was in at 14 and a half. Didn't get my 4 out of it because we ran into a little bit of trouble up here, but I moved my target to 17.5 and out for 3, so that was a nice one shot, one kill into that first little move for the day. It was actually good for quite a little bit more. You can see the trending system kind of kept you in through quite a lot of volatility here up until until we had this break of support here. And the reason why it can keep you in this volatility is because all of the supports, the cyclical supports that we're printing as we come down here, the little narrow bars for the lowest time frame, the intermediate, the slightly wider bars here, bolder bars here for the intermediate time frame, none of those get broken to the downside. So that shows we're just bouncing off those, and we keep on breaking above the little resistance lines. You can see that, and that's what these dots are showing you here. We're breaking above resistance, we're holding at support, and so that's confirming that we're still in an uptrend. So went for a little bit of a blow-off move, kind of a bit late into that, and then we kind of decided to sell off into this move. And then later on in the day, again, we had a really nice setup for a long trade into this whole move here. So the first setup comes with an exhaustion sell and bullish divergence. There we go again. Here, that's step number one. Step number two is that we get kind of pullback to end of trends or cyclical supports kind of coming in. And you can see here's the most important one. This is cyclical support on the 4500 tip bar chart, the highest tip frame time chart here. And that starts to hold, and we get the first sign of strength when we start to break above resistance, and that's this red dotted line here. Bang, and you could either have jumped on at that point there or waited for the lower risk entry point, which is the first cyclical support that comes in after that break, and there we go, bang. And we had flush patterns at these points holding us. People were kind of keen to sell at those points, but that's just flushing out those sellers, and it just means we're advancing and advancing and advancing. So there we go. The trending system again keeps you into this kind of trend move on the way up because all the cyclical supports are holding. None of those are being broken, and what we're doing is we're overshooting these little cyclical resistance lines here, here, and here, and that's what these dots at levels 1 and 2 are showing you down here, and the kind of combination of that is number 3 there. So that was a really nice little trade to the upside there, but I was either in my bed or I'd gone to the beach by that stage, so I didn't see any of that activity. So that was the day trading chart, the 500 tip bar chart. What about longer term? What are we doing? Now, I'm going to show you this. These charts, you can look at them in terms of this trending system like this, the systematic view, or you can have the more traditional view, which is with better momentum down below the charts and better pro-am on these indicators. The little lows, when you get confirmation that the trick to picking these entry points and making sure those low risk entry points are the ones that are going to work out is looking for these blue professional bars for long trades at the lows. You can see here blue professional bars at the lows, that little spike down, blue professional bar, another blue professional bar. All of those are holding. We're breaking above the highs of that. So that little sequence there. There's the amateurs getting a little bit excited, kind of buying that breakout. We have a retracement. There's often weakness after a Rambo pattern. After a Rambo pattern, we get weakness. But as soon as you get kind of blue professional bars coming in at the lows, at those cyclical supports, the market's going to hold. And we had a really nice sequence when that trade set up in the afternoon for this one. Look at this little sequence here. All those blue professional bars coming in at those lows, and the highs of those got broken. They were selling out at this little point here, just taking profits, and then the next time they step in is down here after we've had a nice little correction of 6 points on the way down. They step in there, hold it, and then bang, we're away to the upside. So longer term tip bar chart, I'm starting this with the 4500 tip bar chart, and this gives us all these highest time frames, the 13,500, the 40,500, all on one chart. And this is looking at quite a few days here. These yellow vertical dotted lines, these are the usual vertical indicator that you can get on the site, just shows the end of the trading day and the beginning of the next trading day. So these narrow little gaps, that's the overnight session going on here. The wider bits, that's the day session going on. Now, first of all, this is, I can show you this now on these high time frame tip bar charts because everything's on one chart. And I used to say, look for the end of trends to ripple through the time frames. We're in an uptrend here. Look, we've got red bars going on, we're breaking into an uptrend. You start to see the pullback to end of trend sequences go off on the lowest time frame first. So there we go, pullback to end of trend. Narrow little kind of support and resistance lines there shows you the lowest time frame, and it's a little grey dot here because it's an early end of trend. So that's on the lowest time frame. Then it kind of ripples through the next time frame. Here's pullback. You can't see that. There's actually pullback text there under those red bars there. But pullback to end of trend, that's on the intermediate time frame, because there we go, slightly bigger dot kind of going on here, pullback to end of trend. And then because we've broken above resistance on the highest time frame, we've still got to make our pullback to end of trend. So pullback to end of trend. Yes, we have some weakness kind of leading into that, but the whole move is not over until we get price exhaustion. Pullback to end of trend on the highest time frame, and there we go with a nice big dot showing that. So small, medium, large size dots there, and that's the rippling through of the pullback to end of trend on these time frames. So we get a little bit of still strong into this. You see, even with all that volatility there, we haven't broken any supports at that point there. So the market's still strong, and we push to this upside. That's a little pullback to end of trend on the lowest time frame, syncing up with cyclical resistance on the highest time frame there, and that marked the high. And into that move, again, this is better pro-am on these kind of multiple time frames. You can see here all those blue professional bars, exhaustion buy, bearish divergence into those highs. That's a blow-off move with all the professional bars kind of using that opportunity at 2045 to kind of get out. And we start to break over the last couple of days into this downtrend. So this is the last couple of days activity where we broke here at this point here, cyclical resistance, bang. Cyclical support into a downtrend, all these white bars here. Now, we're still in the downtrend, but we reached some kind of exhaustion. Well, it wasn't an exhaustion sell at this point here, but we've come back up with a whole bunch of blue professional bars. I like to think of this as a last roll of the dice, and let me show you why I think about that. Let me just switch on the better momentum onto this time frame. So here's our exhaustion buy, bearish divergence. We had a whole series of exhaustion buys and bearish divergence and flush and bearish divergence and so on. But it's not until price comes in that the move is actually over. So we got all the momentum patterns saying we're exhausted up here. We're not going to go any higher. This is the first exhaustion sell, getting the move going here, and that's people rushing that sell-off move. And they're a little bit too early, because then we have a move back up to another exhaustion pattern, and that's what I call the last roll of the dice. That's the last time the professionals say, no, these guys are too short, let's force it back, let's kind of catch them out. We'll move the market up quite a few points, about 20 points on the way up here. We'll move it up there, we'll get them all out of their positions, we'll break to new highs where they've got all their stops kind of sitting up at these highs. We'll get exhaustion patterns there, we'll force them out, and that's when we'll get in. And we know they're getting in because all the blue professional bars are up there. And that's the last roll of the dice. Bearish divergence comes in, and then bam, crack, we have a downside move. But I don't think it's over on the downside because we've not got exhaustion sell on the downside. We've not put in pullback to end of trend on the highest time frame. But what we have put in with today's activity is all these blue professional bars into this blow-off move at the end of today. And again, I think that was just professionals just forcing it up. They weren't particularly buying the lows here and saying that's good. They were forcing the market up and getting into more short positions, I think, around this activity. Now, towards the end of the day, I would say blue professional bars, difficult to interpret directionally what they're doing, because most of the time they're just closing out positions. Plus, we're into a long weekend. We've got no trading tomorrow because of the Easter weekend. So there's a lot of kind of just squaring off at the end of a short week, and kind of not holding anything over kind of a long weekend. So there's a good deal of that going on, but I don't think this move is over. I think this is just freaking people out a little bit, similar to this kind of blow off move here, this last roll of the dice. That was quite exceptional strength during today's activity after this lurching down on the Wednesday, the sell off in Europe on the overnight Thursday morning, and then Thursday day session going on here. So that was just freaking people out. So I'm pretty bearish on equities at the moment, but this has to work itself out, and it has to kind of turn around and kind of go the other way, and I don't think we're done on the downside. So there we go. That's kind of what's going on in equities. On the flip side, what's going on in bonds? Well, the bond market is starting to hold. This is a daily chart going back quite a while. This is back to 2013. You can see this is the blow-off move that we had in bonds, with all these end of trends kind of going off and the exhaustion patterns and bearish divergence. And we did have quite a lot of weakness into that, but then we've had this cyclical support on the highest time frame. This is a daily chart, so the intermediate time frame here is a 3-day chart, and then the highest time frame would be a 9-day chart. So it's a little bit different. I used to use daily and weekly charts, or daily, weekly and monthly charts. This using the multiple time frame charts, you're effectively looking at a day, 3-day, and a 9-day chart. So it's a little bit different for looking at these. But we've got cyclical supports that have been holding, and we're in an uptrend here since the end of last year. All these red bars going on here, and we've come into this cyclical support that's been holding and holding for a good couple of weeks in bonds. And so if we get a little bit of weakness in equities, or a little bit more of a sell-off in equities, then the bond market will react. We'll get kind of money flowing out of equities into bonds, and we've got cyclical support going on here in these time frames. We've broken into an uptrend, so it could be a good reason for the bond market to show some strength and the equity market to start to sell off. On the other side, we've also got Japanese yen. And I've been talking, the Japanese yen has been a really important driver of this with the kind of the carry trade. We've had all this strength in the Japanese yen. Just want to remind you what's been going on. Obviously, Japanese yen, the mega decline that we've had for the last 3 years, and it basically finished off with this perfect little Rambo pattern kind of down here, and this was the activity that kind of got us going. Short covering rally, we come back, blue professional down bar holds, we're breaking into this uptrend. When you look at this on the system view of the world, this is when the trending system started to work out for breaks to the upside, low risk entry point. We're in an uptrend in the Japanese yen. We've gone quite hard over the last month or so, and that's why we've got exhaustion patterns kind of going on here. And this is what I'm seeing on a lot of my charts, is that we've had this kind of explosive move up, and some of these patterns, I think gold has ended up with an exhaustion buy kind of up here. It's a combination of short covering rallies and people just jumping desperately into a breakout kind of trending move here, and we're having a retracement. It's not a big retracement at the moment on the Japanese yen. It's a little bit bigger on gold, and I'll go through the other charts and show you where the retracements are. But all those retracements need to hold for this uptrend to be kind of confirmed. So we're breaking above all these resistance lines. That's what this is showing and this is showing. We're in an uptrend here. We've run out of steam temporarily with a little pullback, trend of trend, exhaustion buy, bearish divergence, but continuing through 90 and a half would just show that the Japanese yen strength in that is going to contribute to this carry trade unwind. Any strength in Japanese yen would make it hard for risk assets around the world to be held. You get kind of margin calls and repatriation of funds and blah blah blah. So that strength in the Japanese yen, I'm looking for this to hold at some point, and then a break back above resistance or bouncing off support, anything like that, would just show that this uptrend is still in play after some kind of retrace that we're going on there. And then so that's kind of playing into this strength in bonds, weakness in equities, unwind of the carry trade. Dollar index, it's kind of the flip side of this trade. The Japanese yen looks the reverse, the flip side of the Japanese yen trade. Dollar index maxed out here, and then we went pull back to end of trend on the highest time frame here, and this is where we've started to break into downtrends here and here. And we had a pretty significant break the other day to new lows kind of down here. Let me just there. This kind of breakdown below support at this point. We've kind of bounced back into that range again kind of getting below 95s, 94.5s and so on. That would be kind of confirmation that we got severe weakness in the dollar index and strength in the yen and so on. So that's kind of what I'm looking at. Dollar index is slipping around a little bit. So one of the reasons for that is dollar index is a basket of currencies, and not all of the currencies are it's super strong. So we got the Aussie dollar, Canadian dollar, pretty strong at the moment because the resources, the commodities markets are pretty strong, and the Japanese yen is pretty strong. But on the other side, the British pound and the euro are still pretty weak, and so that's why the dollar index is not acting as a stronger trend. It's because the basket of those currencies are not all on the side of a strong uptrend. Crude, been talking about crude since the beginning of the year, and saying this is maybe one of the most interesting kind of plays for this year. So the first quarter is we get the sell-off move and the low. The second quarter is that we would be looking for a testing of the low, and then the second half of 2016 is potentially when we get our kind of break into an uptrend in crude. So now in crude, what we've had, again, let's go back again to like a 3-year chart of this, and resistance and all these exhaustion patterns and so on. This is where we fell into this mega downtrend. Back in July, what is that, 2014, at 110, 120 bucks, and you can see all the way down. The trending systems kind of kept you in this white bars the entire way down. And now all of a sudden we've got the very first red bar break into an uptrend over the last couple of days. So again, going through the 5 steps, the 5 steps are that you get the first step is exhaustion cell bullish divergence. So here are our exhaustion cells and bullish divergence patterns coming in. So we've got volume kind of exhaustion, which is good. Next thing I want to look for is pullback to end of trends going off. Now we've had one in the lowest time frame here, but we've not had one in the intermediate time frame or the highest time frame here. So we've still got some proving to do in terms of those, testing down. So I'd like to see whether it's pullback to end of trend sequences we see on those intermediate time frames, or is it just support that comes in and hold. We've still got some more testing to do on the downside, but it's interesting, in the last few days that was the first break that we've had, and we've had a little bit kind of move back down, and that exhaustion volume going on there is short covering rally, and people again jumping onto a long crude trade. I think they're a little bit early. I think we're going to test down a little bit more because we've still got to get that kind of cyclical energy out, because we're still below supports on the intermediate and the highest time frame. But it's starting to show, and as saying, the second quarter of this year would be the testing of the low in crude, and so that's all I see kind of going on at the moment, that kind of testing sequence, and that's the first sign of strength that we've had since what is that, July 2014, which is a long time ago. And because sometimes at some point this year crude is going to start to form a bottom and pop, for me the most interesting trade is the Russian index. This is RSX, which is an ETF based on the Russian stock market, and the reason why I like it is because you've got two things kind of going on here. You've got a play on the oil and gas industry, because that's what the Russian index is heavily weighted towards, and you've got a play on the Russian ruble, which has sold down, I don't know, it's like 40-50% decline in the Russian ruble over the last several years, and so you've got all of this. This has been a big move on the way down, and this for me is one of the most interesting plays. We've got this exhaustion cell on the ETF, big blue professional bars kind of come in. We test it down here at 1180, and we've started to find a little bit of strength kind of going on here. But this is the first blush. This is the first little kind of rush to get into this. I think that we need to wait a little bit until we get a little bit of more testing back down into this move. But when that lines up with the crude kind of trade coming together, that for me is going to be an interesting kind of longer term ETF to kind of jump on board. So that's RSX. While we're talking commodities, just let's talk copper. $2 on copper again was kind of the interesting move down here, and this is more of a classic kind of setup here. So the 5-step sequence. So here's our downtrend, all these white bars, bang bang bang, and then we're waiting for our exhaustion volume. There it is, exhaustion volume, bullish divergence comes in. Step number 1. Step number 2, pull back to end of trends. We've got some beauties, pull back to end of trend on the intermediate and the lowest time frame. That's an intermediate and that's a lowest time frame end of trend going off at the same time. We have some little signs of strength, a little bit of a break there, a little bit of a break there, and some more breaking here. We found resistance. That little dot is cyclical resistance on the intermediate time frame. So this is a little retrace we're going through at the moment on copper. So let's see a little bit of a amateur down bar or cyclical support holding, some kind of sign that this little retracement ends up being held at some point, and then we get kind of confirmation, a low risk entry point on the copper chart, and then that could be good for another kind of break the other way. So copper and crude. Copper's signaling earlier than crude, which is kind of interesting. And then the one that took off first was gold and silver. I call this the Trump play, because it seemed like the rally started as soon as Trump started to win Iowa onwards. And for me, silver was the better signal, because silver, I said on silver, look at all these exhaustion patterns on the upside. That's every time we get into a little bit of strength here, we're flushing out, we're exhausting on the upside and kind of continuing to go down. So the silver move would not be over until we'd see an exhaustion sell on silver. That's the exhaustion sell patterns getting this move going, and there's the exhaustion sell on the downside, and that's the first one we saw in all of this move down. So you discount any kind of breaks of strength like this until you see those exhaustion patterns, and that's kind of entries, reversal entries kind of going the other way. So exhaustion sell bullish divergence kind of comes in, step number one. Step number two is pullback to end of trend. So we've got cyclical support in the highest time frame, cyclical support on pullback to end of trend on the lowest time frame. We didn't have a pullback to end of trend on the intermediate time frame. That was the support on intermediate, all kind of coming together, and then we started to break. So a few days ago, that was the low risk entry point that we had on silver, which was coming in at was that 1476, and we're starting to break. We've had a little bit of retracement here, kind of just testing that move kind of down there. Similarly, the retrace in gold has been a little bit deeper. So again, exhaustion sell, bullish divergence comes in, and we start to break to the upside. So we've got our 5-step kind of process starting to line up here with pullback to pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, and then we start to break, and we're into an uptrend here. So we're looking for this retracement to be held, anywhere kind of down here, either cyclical supports or amateur down bars or blue professional bars that come in and hold and we break the highs. Anything like that would be an entry point for gold. So gold and silver are starting to, started this move. And then for playing the gold and silver kind of market, one of the nicest ones is GDX, which is the mining, the gold miners, and this one's been a cracker of a setup. Here, this is really kind of launched to the upside. So again, exhaustion sell, bullish divergence, and a flush pattern. So all of that kind of coming together. Then look at all the pullback to end of trends. Pullback to end of trend on the lowest time frame there. Pullback to end of trend on the intermediate time frame, and the end is actually plotted there. It's underneath those. Can I show you that? It's there anyway. You'd know it because of that signal there, and cyclical support on the highest time frame that kind of comes in. We start to break. There's our low risk entry point on GDX, kind of comes in, and what was that level? That was 1244, and this thing just starts as soon as we're through resistance, we're breaking into an uptrend, bang, and that's people just jumping on board this move. So the GDX has been really strong, so we've broken into an uptrend there, and that's just another way to play gold and silver. But we're going through a retracement phase at the moment, so I'm expecting that retracement on a whole bunch of charts, and it's just a question of how long or how severe it's going to be until we get resumption of trends. So Aussie dollar's been the strongest of the lot. Again, let's look at this kind of setup. The one thing we didn't get with Aussie dollar was a really nice exhaustion sell signal here. This is the Aussie dollar kind of got this move going, that exhaustion sell. We got another one kind of down here. We didn't get one down at the lows. We got a whole heap of blue professional bars coming out at the lows, and look at all those pullback to end of trends. Pullback to end of trend on the lowest time frame, on the intermediate time frame, it's a pullback to end of trend. And then we get our break into an uptrend. We've not had our nice low risk entry point yet, but we're above resistance on 2 time frames. We've got exhaustion buy going on. This is short covering rally type stuff, and we're having this retrace. So we've got all these charts that are showing this first explosive move, kind of getting the trend kind of changed, and we're going through a retracement period where we need to prove that this is a valid kind of breakout. It needs to hold, and then we'll kind of break back above these. So that's the Aussie dollar, and then we've got Canadian dollar is kind of showing a similar type pattern, but I won't show you that. Let's what do we got next? Euro. So the euro's kind of starting to show some signs of breakup to the upside again. Here's this exhaustion sell on the left shoulder. Then we go make pullback to end of trend on the highest time frame. There's a big red dot showing that. We had a little dot pullback to end of trend here. The intermediate time frame is that one, pullback to end of trend, and then the highest time frame pullback to end of trend. So it's kind of, it's remarkable how kind of neat that is, given that's a really untidy price pattern going on here, but pullback to end of trend, end of trend, end of trend, and now we're starting to break to the upside. We've put in our exhaustion sell. We've got these breaks to the upside. That was a little bit of a low risk entry point. We overshot it a little bit. We're coming back up. A break above this 113.5 type level, bang, that would show us that we got a confirmed, strength in the euro. So, and we're just going through one of these retraces at the moment that we're seeing on all these charts that's just needs to be proved, and then breaking back up will show that the trend is on the way. And lastly, the British pound, the poor old pound that is not showing, it's of all those currencies, it's the absolute weakest, and it's because of this Brexit business. We've got this incredible, kind of potential uncertainty in the market. The market doesn't like uncertainty, and we had the bounce off the British pound when we had pullback to end of trend on the lowest and the intermediate time frame with cyclical support, and that was kind of mid last year, and that's why we had this strength. But it was not over on the downside because we hadn't seen exhaustion buying going on. Now we have seen exhaustion buying going on with this move here, and we had a whole bunch of blue professional bars kind of coming at lows. Yes, we've got pullback end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame, but it's not proved itself yet. We've got a little break here, but the trending system has discounted that because we've got to go pull back to end of trend on the intermediate time frame. So this is still showing weakness in the pound. It's too early for the pound. We've got too much kind of political uncertainty in the pound to get a break kind of going. But the euro potentially, is on its way. The Aussie is definitely kind of on its way. So there we go. That was a bit of a rip-roaring tour of the charts. I hope you enjoyed that. And that's kind of what's going on at the moment. Let's see, if we get continued weakness in the equities. We've still got to maybe play ourselves out with a couple of days of strength before things kind of just exhaust themselves and turn the other way. So I wouldn't say necessarily Monday, Tuesday are going to be super weak, but at some point we're going to have, I think, a resumption of that trend on this highest time frame. And we'll get this thing exhausted on the downside before it's kind of all over. So let's wait and see. So long weekend, no trading on Friday. Going to enjoy the time off and get back into it next week.